the tech sector is going to be in focus. As we've been saying, it's the earnings season. It starts with TCS tomorrow, followed by HCLTech and Infosys on Thursday. And the week after, you've got numbers from Wipro, you've got numbers from most of the mid-cap IT companies, LTI, Mindtree, L&T Technology, Infosys, Coforge, Persistent. Basically, the entire lot reports numbers starting from tomorrow till the end of next week. Now, just before that, Nomura came out with a report today. And this report they've written after meeting more than 50 institutional investors in EU and in the United States over the last 2 weeks. And here are some of the questions that institutional investors were asking them and what their takeaway is or what their response to it was. One of the key things is on investor positioning. They're saying that, investors are largely cautious on the Indian technology sector, but they're less underweight today compared to what they were to, say, a year ago. I think that is the key statement. They are cautious, but they're less underweight compared to what they were a year ago. Investor interest is pretty high in the large caps. In fact, all of them except a Wipro, because they've named Infosys, TCS, Tech Mahindra, HCLTech, and Cognizant. So all the large cap IT names, ex of Wipro, and in the mid-cap space, the two companies where investors are interested in, and these are all foreign investors, are Coforge and Persistent. Now, there were three key questions that institutional investors had. One is demand cycle, and where is Indian IT currently in it? Now, Nomura told them that the discretionary demand continues to be hit. BFSI is particularly badly hit, but given the high inflation in the United States and labor shortage, they believe cost takeout deals, basically deals where companies are trying to bring down, lower their overall cost, increase their efficiency, will continue. We've already seen a glimpse of large cost takeout deals in the quarter gone by, and that is something they believe will continue. According to them, growth will meaningfully bounce back. So 8.2% is their estimate for next year's growth for large cap, which compares with just 3.2% in the current year. So growth will bounce back, but on a low base. On margins, the question is there a risk of disappointment? Now, the thesis was that in FY25, margins will meaningfully expand because the supply side issue has eased considerably. But then we had all these large deals, which investors feared will be margin dilutive. So now the expectation is that margins may expand, but not to the extent that the street was anticipating, say, a year ago. So according to Nomura, margin expansion should be about 50 basis points, ex of Tech Mahindra. I think in the case of Tech Mahindra, it could be a lot higher because of the low base. There is a new CEO in place. And finally, I think there was a lot of interest surrounding generative AI. What could the overall impact be? How long will it take to play out? Here, Nomura says generative AI's adoption will increase significantly after 1.5 to 2 years, 18 to 24 months. So nothing immediate. But here's what's interesting. They're saying the Indian IT companies' preparedness to ride the generative AI wave is very high, given the way they're training employees, the tie-ups that they've done with hyperscalers. And they're saying that Indian IT companies are much better prepared today to ride the generative AI wave compared to what they were, say, prior to the last wave, which was the cloud wave. And I think that is also another very interesting, takeaway for me. So those were the two key takeaways. One is that investors are less cautious on IT, and two, the fact that Indian IT companies are prepared to ride the generative AI wave whenever it comes. It may be 2 years away, but they are, working to make sure that, when opportunity meets, preparedness whenever it comes.
If history is any barometer, I think Indian companies have demonstrated that, whether it was the whole move to digital, the acceleration, cloud, all of that.
The question is how soon, right? Are you a late entrant into it, or can you catch on to the wave immediately? And here, I think Nomura is taking the view is that, this time, Indian IT companies are very well prepared. They're much better prepared today compared to what they were prior to the last cycle, which was the cloud wave.
The cloud cycle.
So this time, the preparedness is a lot higher.
Okay, explains the excitement around tech stocks despite a lackluster Q1. Tech's done really well. Then a bit of a profit booking sort of move coming through, but largely speaking, tech stocks have held up in the last 3 months. We'll take a quick break on that note.